Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices still holding the range, actually right in the middle of that range going back to the middle of August. Roughly we need a breakout somewhere below 1165 or above 1225 to see some kind of a catalyst move that would either propel us back up to, back towards the 1250 mark or send us back to the basement or heading back down towards 1150. But either way, we're right in the midpoint of that range, despite the fact that we're basically trading $4 below where we marked when the Fed raised rates last week. And I think that right now the gold market it's still poised to be waiting for something. There isn't a whole lot of second guessing what's going on. You've got higher interest rates across the globe. You've got stronger dollar. You've got rising equities. You've got more attractive investments elsewhere. Why isn't gold going down more, with some kind of urgency? And I think it's because it's waiting for that next dip moment. Maybe it's trade. Maybe it's something going on in the credit markets. Maybe it's something going on overseas. It's some of the other foreign banks. But ultimately, gold's not going down as quickly as you think after the events we've seen over the last week or so. And if you look at the dollar, since FOMC, the dollar has actually been very strong. And today's announcement with the joint Mexico and Canada, the new NAFTA, we'll call it, the dollar got even stronger. And it's still gold, while it was down early, it fought its way back, near unchanged on the session. And the fact of the matter is that gold is no longer really trading off the dollar, at least not on a day-to-day basis. And I think that right now, it's that catalyst moment. What is it going to be? Why would you be a buyer here of gold if everything's pointing towards lower prices? And I think that's got some concerns, because when everybody's on the same side of the boat, we've seen it in history, things tend to not go so well. And if you look at the positioning, well, we talked about spec longs for the last how many years? And then we finally tipped our hat and saw speculators jump onto the short side of gold. And it was brief and it kind of hovered. And as of last week, they're the most short they've been since 2001. It's a long time. And it looks to be that those pre-FOMC shorts got in, didn't like what they saw initially. I'm guessing that they probably covered some of those shorts. We'll find that out next Friday. But ultimately, I think right now the market is waiting for that it moment. Gold prices, which have been plummeting since April, have slowed, despite the fact that the dollar's been strong. So I'm not saying I'm bullish gold here. I think I'm probably leaning toward a little more bearish. However, technicals are one thing, and I think right now the fundamentals are another, and you got to watch those technicals. We're holding at the midpoint. We should be going down. We're not. Let's wait and see when the dust settles. You can certainly sell gold, I think, if it gets down south of 1160 and still be fine. Likewise, I think you can buy it on a move north of 1220, looking for that extension. So right now, gold holding the range, waiting for that it moment. This is Todd Colvin coming to you from the floor of the CME Group.